With the best all-inclusive vacation deals to Mexico and the Caribbean, booking your getaway with Cheap Caribbean Vacations means you have more freedom to do your deal. Whether you enjoy snorkeling, endless margaritas, and more, or simply soak up the sun and sand in a tropical paradise, Cheap Caribbean Vacations has your deal for that. Plan and book the exact getaway you want at exactly the right price for you by using our exclusive Budget Beach Finder, or find a featured all-inclusive package to Jamaica and do your deal at cheapcaribbean.com.
Good afternoon. We are doing it live right here on 790 KABC right after Ben Shapiro. And just before the 790 KABC News Blitz with Randy Wang, we're doing more in 2024 at 4 in the afternoon. It's Motec on Money, live on the air, 790 KABC, streaming live online worldwide at kbc.com, and the on-demand Motec on Money podcast at kbc.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. Well, search and rescue efforts continue back east following the horrific collapse of the Francis Scott Key Bridge in Baltimore this morning. The assessment of the impact of the loss of the bridge to the nation's economy and supply chain now underway. The Port of Baltimore is one of the top 15 U.S. ports and the East Coast port closest to the Midwest compared to others. It's a big port for the auto industry. The ports of L.A. and Long Beach might see additional business because of what happened today. I'll discuss today's tragedy and impact on the economy and supply chains with Mark Wilbur, founding member and former chairman of the Los Angeles County Business Federation, LA BizFed, chairman of Employers Group, and former associate dean of the USC Marshall School of Business. Mark Wilbur will be joining us live later this hour. Stocks did finish lower today, another breather on this record-shattering rally we've seen lately. Investors continue to assess the path of the Fed's monetary policy ahead of another key inflation report that's set to come out on Friday. It's a holiday-shortened week on Wall Street. The market will be closed on Friday for Good Friday ahead of the Easter holiday weekend. The Dow coming in for a closing loss today of 31 points, the S&P 500 down 15, and the Nasdaq slipped 69 points. Taking a look at the yield in the 10-year note, it has dropped for the fifth time in the past 6 trading sessions. This is the one that impacts the fixed-rate mortgage rates. The yield in the 10-year note now at 4.24%. New readings on real estate today, and we'll talk about that with Dr. Selma Hepp, the chief economist at CoreLogic. Today, the CoreLogic S&P Case-Shiller Home Price Index was released with the latest reading on L.A. home prices, San Diego, as well as San Francisco. But first, on your money, the markets, and the economy. Joining us live now, money manager Ken Winans, president of Winans Investments, market historian, author of Investment Atlas 1 and 2, Forbes magazine contributor, and longtime contributor to this program. Ken Winans, thank you very much for taking the call, and certainly everyone talking about what happened back east and that horrific collapse of the bridge there after getting hit by a cargo ship. Give us your assessment of what happened there today.
Well, the first thing that came out this morning, I mean, any of us who were around during 9/11, you first worry about, oh gosh, here we go again, terrorism. And there were indications of that initially. At least there was concerns of that. Clearly, that's not what played out. But Frank, I think as we've gone through the day, there were several key things that did pop up. Number one, the fact that the market basically didn't have a lot of volatility as this unfolded shows there's some tremendous resilience that's going on certainly with the U.S. market. And then it's predictable that the transportation stocks ended up getting hammered today pretty hard. And it wasn't just maritime shipping. It was pretty much anything in the transportation sector. As I look at it, though, and again, it's my job as a money manager is to try to, look around that corner a little faster than everybody else. And I do think, as you said, Baltimore is a very important part. In fact, I've been on that bridge. I have family ties to Baltimore. You have no idea how important that artery is. If you were to think of the San Francisco Bay Area, when what happened in the '89 quake, when part of the Oakland Bay Bridge collapsed, this is worse. This is actually worse. And so, the 695 freeway, which is an interstate that runs right through there, will be closed indefinitely. But the problem is, go back to inflation. It's very, very precarious right now on inflation being under control, so the Federal Reserve feels comfortable, and having no accelerators. We've talked before about wages going up throughout this year. That puts pressure on the inflation gauges. But now you're talking about kind of going back to what happened during COVID, when you had good old-fashioned logistical shortages. That could also cause us problems here. So I think that the Federal Reserve, especially those of us listening to the show, care about the economy and certainly our investments. I think it's safe to say that the Federal Reserve is probably going to extend their wait period on lowering rates, partly because the inflation data that's going to come out for the next 2 months will be hard to gauge with this new disruption.
On there live with money manager Ken Winans, and you mentioned some of the shipping stocks. Shares of AP Muller Maersk dropped nearly 4% after the Danish shipping and logistics giant said it had chartered the ship that crashed into Baltimore's Francis Scott Key Bridge today. The company released a statement. We are horrified by what has happened in Baltimore, and our thoughts are with all those affected. Maersk said in a statement the ship, the Dolly, was carrying Maersk cargo, but none of its crew members. Maersk shares dropped 28% so far this year. This stock happens to be traded on the Danish exchange. Shares in Copenhagen falling 14%. And watching the other shipping names, which of course have been impacted by the Red Sea situation and other obviously global upheaval in the Middle East and so forth. What about that important sector of the economy, Ken? The supply chain and shipping. What do you see ahead there?
Well, Frank, you just hit the nail on the head, as you usually do. When you look about what's going on around the world geopolitically, not to mention what's going on in the Pacific between the U.S. and China on freight routes, certainly with what's going on with Taiwan, what's going on in the Philippines. The Philippines and China are having a massive dispute about open waterways with those artificial islands. So shipping routes right now are very, very difficult to control and to maintain. And then you deal with the fact that the U.S. Navy is on double duty and in many cases stretched very thin when its primary job is to keep those lanes open, to keep shipping and commerce flowing freely and safely. So I think, unfortunately, we're going to continue to have chaos throughout this year in these areas. But I do think it raises the more valuable question about how sturdy are we on, as you said, will the West Coast benefit from what's going to happen to this? Or certainly cities like Salt Lake City, I mean, many people might be shocked to hear this, that's actually considered an inland port of entry simply for air freight. So, so you're seeing a reshuffling of everything that started during COVID, but now it's raising issues like this because, again, that bridge, it will take a very long time to repair it. And then, of course, you're looking at, Baltimore obviously had those terrible problems during COVID with, the riots and certainly the city, the inner harbor part of the city having its troubles. So, again, do you see companies moving out saying, okay, that's it, we're going to go to other places? So the repercussions in the long term can be very hard for this area. For many people who on the West Coast might not realize, Baltimore is just a 45-minute train ride from Washington, D.C. It's an important city when you think about the East Coast. So again, we're going to have to figure out how the repercussions play out for the remainder of this year.
On there live with money manager Ken Winans. Another big story on Wall Street today, DJT, Donald J. Trump. That's the stock symbol. First trade ever today with the new stock symbol DJT. Shares of Trump Media and Technology Group soaring as investors rush to buy the stock with the new ticker symbol that bears the initials of the former president, DJT. MarketWatch was tracking this today. Ken, it took flight after the opening bell this morning. The stock soared as much as about 59% at the intraday high of 79 and change, which was reached within the first 20 minutes of trading. By late afternoon, it was up about 44%, but looks like some profit-taking knocked it down to a closing price of 57 and change, up about 16% on the day. This rally added to the 35% surge on Monday after the closing of the merger that took Trump Media public was announced. What about this one?
Well, it's interesting in my line of work where you have clients from both ends of the political spectrum. I did get an earful today from both sides, and it's everything from people finding the fact that his initials are a stock symbol, that it's arrogant, to people saying that thank goodness since he has lost his Twitter feed, as we used to call it, he now has a bigger voice, a bigger bully pulpit. So it all depends on which side of the aisle you're on. But clearly, Now, this stock, just so everybody knows, this has been out in the market for quite a while, and it had been very illiquid and very volatile. And I know I did have some clients who bought it years ago, and of course they're very, very happy on how it's popped. But it will be interesting to see if it really has legs and it moves forward. I actually think it does. Anything like this in an election year, people try to find their pets, and I think this could be a political pet for a lot of people, or at least for people who support former President Trump as a candidate will buy the stock in a sense of patriotism. So something we haven't talked about in a long time, but there are people out there who will put their money where their mouth is, and they will step into a political belief.
And that's an important point. This is basically the same stock when it was Digital World Acquisition Corp. With a different ticker symbol, DWAC, before the merger closed. It has a different ticker now, and the company has a new name and new chiefs running it. DJT is the ticker symbol, which did get a big pop today. So we will certainly be paying attention to that one. This is another interesting story that came up today. Krispy Kreme and McDonald's teaming up in a big way. Did somebody say McDonald's at Krispy Kreme, or how about Krispy Kreme at McDonald's? Shares of Krispy Kreme up about 40%. Now, here's a company that was able to raise the dough today, Ken, this donut company, up 40% on news that it's teaming up with McDonald's to sell donuts at McDonald's.
Yeah, I mean, it's funny how some of these companies that had been hot, a decade ago, suddenly are coming back very, very strong. Now, Krispy Kreme, I'm a historian, I'm a history geek. This is a company that has been around a very, very, very long time, gone like Dunkin' Donuts. They've been around forever, and, they've gone in and out of being public-private companies. And when they came public again, of course, the stock rallied dramatically. Then it obviously collapsed. It was a bit of the old roller coaster, but to have it come back this strong. But Frank, I'll tell you, I think it's just fascinating how we seem to ebb and flow on diet in this country. People get very concerned. They start going to companies that just make veggie burgers and veggie hot dogs to suddenly this. And very clearly McDonald's, which had been trying to go health conscious for so long, to go this route, this is a serious pivot. So again, I have to say, I think it's going to be very successful, especially when you go to parts of the country where donuts are part of the morning routine. So yeah, I think it's probably a very, very great move for both companies.
Very interesting. And as I like to say, nobody got fat by eating one meal. So yeah, once in a while, maybe, right? Now, what about Chipotle?
Well, it is. Hey, Frank, it is funny though, and I know you know this. If you go to New York City, you go to Boston. I only eat donuts very, very sporadically. Out in California, it's croissants, or it's something that you get at Starbucks. Back there, it's donuts, and so I think we have a tendency to say donuts in California. Wait a minute, no, think about donuts. McDonald's is an international restaurant. You got to think global. That will probably work. Now you're asking about Chipotle and what they're doing.
Yep. Yeah, let me ask you about that because a 50-for-1 stock split, people have been asking me about it. Chipotle, a very expensive stock on the New York Stock Exchange, up above $2,000, I believe, per share. And they recently announced that they've approved a proposal for a 50-for-1 stock split. Tell us what people need to know about that.
Well, number one, if you own Chipotle stock, just keep in mind that the split is really to reposition the stock so it's more. I mean, the original reason we're doing stock splits is to make it so it's cheaper for new investors to step in. A lot of companies are in that camp now. I mean, for years and years, I remember Warren Buffett used to say Berkshire Hathaway will never split its stock. He only wanted institutional investors to own it. He didn't want it retailers or retail investors or little investors. So there is that philosophy. But I actually think we're going to see a lot of stock splits over the next couple of years. I mean, a lot of the companies I've even talked about on the show, the shares are trading at $1,000, $2,700 per share. I think you're going to see a lot of splits. But the bottom line, a split absolutely does nothing to the value of the stock. I mean, there's arguments made in both camps that stocks can pop. I think it's mixed. I mean, I've seen stocks go down on it, but at the end of the day, it's meant to attract smaller investors and to help them with their option incentive plan for their managers. That's why they are doing it.
Right. I was trying to explain to someone the other day. So it's like taking a dollar instead of four quarters, you'd have 100 pennies, something like that. It's split up, but it's the same value at that point.
Absolutely. And as far as the stock exchanges are concerned, now you can actually make the case from the standpoint of transactions. When you have more shares, the percentage cost on trading those shares actually goes down as volume goes up. So you can argue that somebody who wants to sell that stock might find that the transaction costs are lower. But Frank, it doesn't. I don't value or consider it important when I'm looking at the value of a company within my portfolios. And I encourage most of the investors to feel the same way. It might seem alarming, but it actually see it as a positive in a lot of ways. It's good. It shows the company's growing and trying to attract new investors.
Chipotle stock, by the way, was up 52 and change to $2,955.53 a share. And you mentioned Berkshire Hathaway. That is Class A shares, the most expensive stock on the New York Stock Exchange. I haven't taken a look at this one lately, but it is currently trading at $622,380,000 at the moment, up about $3,100 on the day. So that is the most expensive stock on the New York Stock Exchange. They did issue a Class B version of Berkshire Hathaway years ago, and that's a little bit more affordable at $411 and change. At this point, Ken
Frank,
Winans, where are you?
Frank,
Yep. Oh, okay.
Hey,
go ahead.
That Berkshire Hathaway's price, that makes Bitcoin look cheap.
There you go. That's right. Well, we'll get to that later, but let me ask you the big question here now. Where are you putting money now and/or taking it off the table?
I just did a big rebalancing in our portfolios, and now part of it, too, is that this time of year, many people in the audience might not know, but I run an investment firm, and many of them are individual investors, and obviously we all are dealing with taxes this time of year. Money typically does come out of the market for people to pay their tax bills. We've been seeing a lot of that in my office over the last couple of weeks, and so you can argue there is some money leaving the markets, but quite frankly, the number one thing that I'm looking at right now is I'm relieved to see it, a broadening in the rally, meaning that there's more and more companies and groups participating. Now, the big group that, although it was a very boring day, was healthcare. Healthcare stocks, for some reason, a lot of bigger investors were going into those today. I think that as we play out 2024, we're going to find that unlike last year, where tech was the primary driver in the rally, we're going to find that it's simply just much more broad-based. And although there will be days where maybe you'll see more volatility in tech, you're going to see that the market might actually do well because other groups are doing well. So companies that I would look at buying right now, quite frankly, anything that has been beaten up, and I'm going to throw a couple of things out there. Utilities are a good example. Many have just been mauled for the last couple of years. I've been asked by a lot of people, what about dividends? If you're looking for a dividend stock, I would look toward utilities for people who want that dividend play within a common stock. I think you also need to take a good, hard look at the retailers and the restaurants. They have been resilient. And some of my all-time favorite retailers are the automotive tile companies, which are like O'Reilly and AutoZone. I would certainly take a good hard look at those companies. It's one of those kind of things where you are not going to order that on Amazon. You're going to go down to the local store to get your spark plugs or your fluids or whatever you need for your cars. So I like plays like that, especially looking at the big driving season through this summer. People are getting their cars ready now. Now, it's funny. I want to bring up, again, Frank, I'm bringing it up, Bitcoin and Ethereum.
Go for it.
I'm working on my new Forbes article, and part of it is I'm really examining, as I'm going through my certification right now as a cryptocurrency trader. Now that there are ETFs, anybody in my position needs to better understand it. I wanted to really dial in on the correlation, meaning the relationship of crypto with the stock market. Here are the numbers. Against the NASDAQ 100, month-to-month comparisons, meaning they move together 66% of the time. Quarter-to-quarter moves between crypto, and by the way, the big cryptocurrencies, obviously Bitcoin and Ethereum. Against the NASDAQ 100, 77% of the time, and in annual returns, 100% of the time. I'm not saying they move the same amount, but I'm saying they move in the same direction. And clearly, I think anybody who's committed to crypto thinking that it's going to be a hedge against stock market volatility, I'm just here to tell you that my research does not bear that out. It doesn't mean don't go into it if you're committed to that alternative, but don't see it as a hedge against stock market volatility, because at this point in time, that does not bear fruit at all.
Well, Ken, thank you for that thorough assessment. On this program, we talk to the biggest fans of crypto who think it's a digital gold, to the harshest critics who think it's pixie dust or even rat poison. So we cover the full spectrum here. So we'll stay on it. We're going to stay on it, Ken. Ken Winans, thank you very much for taking the call here this afternoon.
Thanks, Frank. You take care. Bye-bye.
Thanks very much. That is Money Manager Ken Winans, president of Winans Investment, author of Investment Atlas 1 and 2, also Forbes magazine contributor. He just mentioned his next article coming up on crypto. We'll be looking for that. Right now, out to the freeways we go to look for a traffic update here on 790 KABC. Friends, people like you and me who have our ear to the ground on all things business. We like to be informed and indeed well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still, we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that's not their fault. And that's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlements, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it. The number to call, 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. Motac on Money continues here in 790 KABC. Good afternoon. 790 KABC welcomes Matt Frazier, America's top psychic medium, coming to the United Theater on Broadway June 26th. Tickets are on sale Friday at AXS.com. And right now, caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Call right now, 1-888-790-5222. Speaking of winners, we got that big lottery drawing again tonight after no one picked all the winning numbers last time around. So we got a couple of big jackpots tonight and tomorrow. So take a look at that. Nobody hit the big jackpot today on Wall Street aside from maybe former President Trump with that DJT hitting the markets today. The stock had a big debut after its name change and ticker symbol change and the recent merger there. So DJT shares moving up about 16%, and its first trade with the new symbol DJT for Donald J. Trump was it started the day popping about 60% early on. It got up to around 79 and change, and ended off its best level of the day, closing at 57.99. The overall market, though, giving back some ground. The Dow down 31 points today at 39,282. The S&P 500 down 15 at 5204, and the NASDAQ slipped 69 points at 16,316, down for the second day in a row, coming off its all-time high, which was achieved last Friday. The yield in the 10-year note now 4.24%. That's the one that impacts the fixed-rate mortgage rates, and we'll talk about that as well as real estate prices with Dr. Selma Hepp, the chief economist at CoreLogic, who released the CoreLogic S&P Case-Shiller Home Price Index this morning. Bitcoin right now up about $700 at 70,195. Ethereum up about 30 at 3605, and Doge at 18 cents. Gold hovering at 2,177.50, up 30 cents. Still pretty close to the record high it achieved recently, which was $2,225.30 an ounce. And now the latest news for you here in 790 KABC. Motac Money continues here in 790 KABC. The flickering lights and billowing black smoke seen on the cargo ship that crashed today into the Francis Scott Key Bridge in Baltimore represent multiple levels of failure, according to maritime transportation experts. The Dolly, that's the Singapore-based cargo ship that crashed into a column of the bridge at around 1:30 in the morning in Baltimore, causing the 1.6-mile-long overpass to collapse. The ship was just a half an hour into a planned 27-day voyage. Captain Jeffrey Spillane, the dean of the School of Maritime Education and Training at State University of New York System Maritime, called today's crash a one-in-a-million incident so catastrophic that it will surely cause changes in the industry. He spoke to the Baltimore Banner. The smoke and flickering lights might mean the 1,000-foot ship lost electricity, which can lead to a loss of propulsion and steering, calling such a loss highly unusual. Search and rescue efforts, meanwhile, continue back east following the horrific collapse of the Francis Scott Key Bridge in Baltimore. The assessment of the impact of the loss of the bridge to the nation's economy and supply chain now underway. The Port of Baltimore is one of the top 15 U.S. ports and the East Coast port closest to the Midwest compared to others. It happens to be a big port for the auto industry. The ports of L.A. and Long Beach might see additional business now because of what happened today. Let's bring in Mark Wilbur now, founding member and former chairman of the Los Angeles County Business Federation, LA BizFed, chairman of Employers Group, and former associate dean of the USC Marshall School of Business. Mark Wilbur, thank you very much for taking the call following this tragedy back east as assessment continues on the economy and supply chain. Give us your assessment of things here at the moment.
Hi, Frank. Thanks for having me on. Well, it's interesting that the footage of that bridge coming down was stunning. You couldn't kind of take your eyes off it. And thankfully, more people weren't lost. I mean, I'm concerned, obviously, about the missing few, but apparently the Mayday was able to get out fast enough that some of that traffic was able to be minimized. When you start getting into the details of this, it's very interesting. It also highlights a little bit of resilience in America's supply chain. By late today, almost everything had been rerouted. And because Baltimore is, the eastern seaboard is different than the western seaboard. You think of like L.A. and Long Beach and, of course, Oakland and San Francisco, and then you get up, towards Washington. These are huge, huge ports in the United States. And then, of course, Houston and Louisiana. But when you get on the eastern seaboard, there's multitude of different ports along that seaboard, and CSX sent out messages that all of the stuff had already been rerouted, the things that were in transit that they had control over. Obviously, the stuff that is still on the ship is a problem. But I was really impressed with that. The one thing you can't get around is the I don't know if you've ever been in that area, Frank, but I've been across there. I've spent a lot of time in Washington, D.C. It's the only above ground transit across that waterway. The other two are tunnels. So the hazmat industry is going to get impacted. There's no question about that. And obviously traffic and commuters are going to be impacted because, a bridge like that takes years to get rebuilt. That is not we're one and done here in a couple of months. That is going to take a while to get that resurrected. So, but at least thankfully it's not a high season for shipping right now. It's a pretty normal time of year. So that also was a breather for the supply chain that hits that area. But they're going to have to work on that. It's going to be, it's going to have an impact. They are a small automobile. When I say small automobile, they're a big automobile port, but for their focus is in the small automobiles. The way that came out didn't sound right. But anyway, I think they've got some workarounds there now. I was very, very concerned this morning, but the resilience of America's supply chain is really just kind of mind-blowing sometimes. And this was one of those cases because it seems like from a supply chain standpoint, it seems like it's going to have minimal impact.
Very interesting. Of course, we were on the air during the days when we had those tremendous backups at the ports of L.A. and Long Beach back during the pandemic days when the ships were waiting to come in. Might we see a similar situation either back east or this way as shipping is rerouted? What's the buzz among the business leaders you've been talking to today about the impact of this?
I don't think there'll be too much of an impact for the port of Los Angeles or Long Beach. I mean, if there is, it'll be minor because if you really think about most of the goods are coming around from the other direction, and they're going to be heading into ports that are in that area within that transit system to get those goods moved around. So I don't think it'll have too much of an impact here. Some, but probably not enough that would create backups here in any way, shape, or form. Nothing like we were dealing with during the pandemic where ships are parked offshore and all the craziness that you and I were reporting on back in those days.
Right. We haven't really talked about the supply chain much since we had those trains broken into. I haven't heard too much, or I don't know if anyone's taking a look at what's going on there these days, but it'd be interesting to see what's happening there.
Yeah, it's interesting. There was so much reporting on that. You being one of the key reporting sources in those days.
With you, sir. Yes.
That, well, I mean, it really got elevated, and so now there's full-blown cameras. There is security systems put in place. That's why you're not hearing much about it, because they had to finally deal with it. But people were, kind of in crazy desperation mode in those days, acting out in ways that really we had never seen before in Los Angeles. And thankfully, that is under control. At least it certainly seems like it. Otherwise, I think we'd be hearing about it.
Of course, you watch the labor situation here in Los Angeles very closely.
Yeah.
I don't know if you saw the report, but California now leads the nation in unemployment after a slower job growth, and a lot of California food chains are now laying off workers. And if you saw that report ahead of the new minimum wage about to kick in, give us a quick assessment of what you're seeing on the labor front.
Yeah, when this got passed, I remember you and I had a good long discussion on this one, and at that time, you and I felt it was going to happen, that companies were going to get to this point and make some tough decisions, and that's exactly what's happening. They're laying people off. A lot of them, sadly, are the people that can least afford to get laid off. A lot of delivery drivers, a lot of people at that minimum wage level, and they're just cutting back in order to be able to keep their businesses running and keeping them operating. These are the consequences of these kinds of decisions. You make a decision in Sacramento that you think is a good idea, but you don't think about the downstream consequences of these decisions. And, ultimately, these businesses are trying to survive. And so when you move the minimum wage to $20, that's going to have an impact. It doesn't mean the business is closing, doesn't mean that everybody's getting fired, but it means that it's going to be people wearing multiple hats and having to do more with less, except for in their wage. So it's a difficult time, Frank, for these companies. Saw an interesting report today, if you'll give me 1 minute on this. The NFIB did their annual study, and I thought this was, because this impacts exactly what we're talking about on wages. A net 61% of small businesses across the U.S. increased their average selling prices in January. That is a 48-year high, because they always lag a couple of months. That's a 48-year high on the impact of inflation across the U.S. Looking at small businesses, and ultimately, these things start hitting everybody. You see people starting to make decisions. I think you're going to start seeing it into the things that are fun.
Yep.
Concert tickets or travel or those extra things that you thought you'd want to get. I mean, I had one person tell me today that, only the kids are getting Easter baskets this year because, inflation has just, slammed them so hard that they're just going to do the kids.
Egg prices have soared. You just reminded me, we got egg prices up too in a big way. So
yeah.
That's something that we'll be dealing with this weekend, Mark. Well, thank you very much for that important update here, and we'll continue to track what's happening back east as well as locally, of course. Mark Wilbur, founding member and former chairman of the Los Angeles County Business Federation, LA BizFed, chairman of Employers Group, and former associate dean of the USC Marshall School of Business. Mark, thank you very much for joining us here this afternoon.
Thanks for having me.
Right out to the freeways now, 790 KABC. Motec and Money continues here in 790 KABC. Up and away for home prices. New readings on real estate out today. The latest report on home prices from the CoreLogic S&P Case-Shiller Home Price Index is out. Joining us live now, CoreLogic Chief Economist Dr. Selma Hepp, who released that report this morning. Selma Hepp, thank you very much for coming to the line, and take it from the top and tell us about this latest report showing home prices basically at all-time highs here, right?
Yeah. Well, first of all, thanks again, Frank, for having me on the show. But yeah, today's data from Case-Shiller showed basically home prices were up 6% on a year-over-year basis. But keep in mind, we're comparing home prices today with the bottom, which was in January 2023. so that's one of the reasons why this a seemingly large increase on a year-over-year basis, because when you look more closely on in terms of monthly gains and the impact of more recent increases in mortgage rates, if you remember October, November mortgage rates there hitting some 8%, that did have impact on monthly gains in home prices. So we did see a little bit of slowing of that annual growth rate. And so now as we come into the spring home buying season, this 6% is going to shrink a little bit, and it's going to, go back to that more long run average of about 4%. But what's most interesting to me, and kind of really, really exciting, well, it depends what side of the chair, what chair you're sitting on, or if you're a seller or a buyer, but home prices in San Diego and Los Angeles were actually the top two markets among the 20 Case-Shiller markets in terms of home price appreciation. And so while the national increase was 6%, in LA we saw a 9% increase in home prices over the last year, in San Diego 11%.
And you just recently gave the keynote real estate presentation at the CACTAC conference in San Diego last Friday. I had the privilege of being there when you gave a comprehensive update on real estate, and San Diego coming in with that big gain over the past year, with Los Angeles also an impressive gain. But the Bay Area actually dipped month to month, right? And is not the gains there have certainly slowed.
Yeah, certainly. So that's the area that's been a little bit more impacted by these higher mortgage rates. And so in terms of home prices, over the last couple of months, they've declined, and more notably in San Francisco than really a lot of other places in the country. Bay Area continues to struggle in many ways in terms of home price appreciation. It is, one of the most expensive markets in the country, and so when mortgage rates are high, that impacts those markets. And when we look at where home prices are in the Bay Area compared to where they were at the peak, they are still yet to come back to the peak. That peak was in summer of 2022. But when you look at LA and San Diego, they've exceeded that peak. And and I talked about this at a conference a little bit. One of the reasons for strong housing markets down here in Southern California is that some of the Bay Area folks and folks from Northwest are in fact moving down here because these are relatively more affordable markets for them compared to what they're paying up north. So some of this migration has actually helped boost home prices down here as well.
That's very interesting. Maybe you can share with this audience now, what do you see ahead for home prices here in the Los Angeles area and for mortgage rates as well?
Yeah, mortgage rates is the wild card. You guys talked about inflation a moment ago. So that's still, unknown really when we're going to get back to that target that Federal Reserve is so focused on. We still expect mortgage rates to continue coming down, very, very slowly over the course of the year, still reach some 6% by the end of this year, hopefully, from where we are today. We're a little bit, around 7%, I think, still at this point. And what does that mean for home prices? On an annual basis, I mentioned earlier how a lot of this large gain, the 6% gain, is because of the bottom in January. And then when we came into spring home buying season last year, what was really interesting is that there were more buyers again than sellers coming in. And so that put pressure on home prices. And we saw a lot of appreciation in spring of last year. So when you start comparing that year-over-year change, you'll see the annual rate be a little bit smaller. But still, we do forecast home prices to continue increasing by a slower pace again. And the other thing is what's, actually in favor for our markets here in Southern California is that we're seeing a little bit more inventory out there. That's been a big constraint for our markets, especially, over the last few years. We've been at really historical lows in terms of availability of existing homes for sale. That's improving, and with having more inventory, we'll at least have more, transactions in the housing market, more opportunities for potential home buyers. So I see that as a very positive going forward.
Dr. Selma Hepp, the chief economist at CoreLogic, who released the authoritative CoreLogic S&P Case-Shiller Home Price Index today. Thank you very much for taking the call live with us here this afternoon.
Thank you so much for having me, Frank.
Thank you very, very much. And Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back tomorrow at 4 for Motec on Money here on 790 KBC.
Business has always been about turning a profit, making money. But can it stand for something more? Something beyond dollars and cents? We think so. We think that today, business has a higher calling, a purpose to be fair and just, to do right by their workers, customers, communities, and the environment. And it turns out companies successful doing that also do better for their bottom line. When you see the Just Capital seal, it means this company is a force for good. Visit justcapital.com to learn more.